Hi there, Cyril Trader here. I'm going to do a weekend update on the major US indices and starting off with SPX. So looking at the wave count here on the daily chart, this is what I'm currently leaning on, and that's that we're working a 5-wave move off the March bottom there. And you could debate whether, as I pointed on the last video, whether this is in fact the right wave count here, where you already have a 5-wave move up, and this was an extremely weak wave 2, and we're just already heading up in a third wave, which seems ridiculously bullish given the actual conditions in the real world. So I think it's probably more appropriate to lean on the less aggressive wave count, which is still bullish, and that's where we're still working that initial 5-wave move off the bottom, and we're likely in the midst of that 5th wave, possibly for a larger one, and then we'd be looking for that larger pullback in a wave 2, which would be a more attractive longer-term entry. But nonetheless, it definitely looks like we're still going higher here, at least in the near term. And I am still long those ES contracts, still targeting a move above 3,000 here. And the targets really haven't changed. And you can just see if I do a little parallel channel. So assuming that we're calling this a 4th wave, you can see we had a nice little ABC correction here in what I'm calling a 4th wave. And that looks complete. And now we're moving up in the 5th. But if I go in on a shorter time frame, maybe the hourly, you can see we've gone up in a little impulse wave, and it looks like we're just kind of going sideways, winding up for that next move up. And you can see we're even just kind of dancing along what used to be that resistance line of the corrective channel. Now it's kind of acting as some support here, and really just looks like we're building up for a move above 3,000 here. So targets, just a reverse fib of this ABC down, 3,000-ish, and then over 3,100. So that would be an interesting zone. Anything over 3,000 I think would be a good sell if you're currently long. And then at that point, I'll just be eyeing it up for a potential short entry, but no need to get ahead of ourselves here. Why short earlier than you need to? Looks like we're still going higher. So just wait for the actual trade to set up before we get there. Maybe get up to a previous resistance level here. So over here we got 31.36. That lines up a little bit with this extension of the ABC correction we had there. So that's a potential upper target. And I think we're going to get well above 3,000, probably 3,100 plus, but we'll just have to see. Okay, that's really all there is to mention about the wave count. Not a whole lot has changed. We spent this week largely just kind of going sideways in what I think is just establishing a little base for another move up. So that's really what I see going on there. And obviously things can change, and if we just start tanking unexpectedly, well, now we might be looking at a more bearish scenario. But currently that's not what I'm seeing. And my stop certainly wasn't anywhere near violated this last week, and I'm still long, looking for that move above 3,000 on the ES futures. Okay, so there's that. Now on the thinkorswim candlestick chart, certainly nothing concerning here. We're still above the daily T line, still acting as support. All our moving averages are kind of starting to curl up here. You see the 50 curling up. The 200's basically just flattened out. So another thing, I mean, when we get this close to the 200, it's almost inevitable that we're going to touch it, in my opinion. And it's currently right around 3,000. Again, there's also that gap that we haven't filled yet, and that's a nice target as well. That gap's at 29.9983. So again, right around 3,000. So we're very certainly, or I should say, we're very likely to touch 3,000, and then I suspect we'll go, 3,100 plus before it's all said and done here. And then maybe look for potential selling opportunity. But right now, it just doesn't look quite ready there. Now, daily candle, we did a little bit of a bullish, I guess we'll call it a miniature bullish hammer on Friday. And if I can just get that dialed in there, we'll zoom in. And yeah, you can see on the daily here on Friday, not a very eventful day, pretty small range. But again, respecting the T-line as support and still a little bit of a bullish hammer kind of signal. So yeah, definitely looking higher this coming week. On the weekly candles here, nothing bearish yet. We basically had a new weekly closing high and also a new intra-week high for this move off the bottom. Certainly not a reversal candle by any means. And you can see that 50-week simple moving average lines up quite well with the 200 daily. Again, another nice technical area to touch. So I point that out. And we'll go over to the Dow, which is a little bit of a divergent index, at least for now. So the S&P and the NASDAQ have certainly made new highs above their April high. The Dow is just kind of punching up against it. Now, the possibility is certainly here for kind of a double top and then failure. But I suspect the S&P and the NASDAQ will pull the Dow up here above its April high. So the Dow just kind of a weak participant, a weaker index. But again, on the Dow, you still have this ABC down. And it does look like we're going to go up and make a new relative high, even though it's just a little weaker relative to the other two indices. I just have that horizontal line showing the current high, and I think we're going to take that out pretty quickly here. But definitely worth noting that the Dow is just a weaker index in general. And if we look at the weekly candle here on the Dow, again, not much to say there. I think it's a new weekly closing high. So even the Dow still making some upward progress here, despite being a laggard. Okay, that's really what I wanted to point out there. And NASDAQ composite. So we've convincingly gotten above the 786 retracement on the NASDAQ composite here of this entire move down from the all-time high. So now that we're in this gap fill area, to fill the gap, we go up to 95.42, and to actually match the old high, we go up to 98.38. So the NASDAQ, I mean, at this point, you'd certainly think it would pull back here, even if we're, eventually going to be in a new bull market. And I'm sure there will be a pullback, but it looks like that gap fill and possibly even the old high are just so close. We might just touch them before we actually get any kind of significant pullback. So I wouldn't be looking to short the NASDAQ just yet. I mean, we have to break trend before you even think about shorting the NASDAQ. And I guess before you even think about shorting the overall market, the S&P or anything. I mean, until you can actually, look at this, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This has been a very clean uptrend. So until you at least start breaking that higher low pattern, start breaking some previous support levels, I wouldn't even entertain a short. I mean, this is just kind of a textbook uptrend. Of course, the trend will change and at least correct at some point, but there's just no evidence that that's happening yet. So I wouldn't say chase the NASDAQ long here, but on a short-term basis, it'll probably work. Not my cup of tea, but I'd rather shoot for those upper targets on the S&P. A little more confident in those. But yeah, it looks like we're almost destined. It's almost inevitable here to fill the gap and possibly even touch the old high on the NASDAQ. Now, it could just end up being a double top, and this could be a very large pattern, corrective pattern, where we, maybe it's a larger flat or something like that. And we might still go down to some, extremely low levels once we actually start breaking trend. But for now, that's a no touch for shorting. Now on the weekly here on the NASDAQ, very strong. We had that weekly doji last week, which was a potential reversal, but obviously that didn't proved to be the case, and we've headed higher, new intra-week and closing weekly highs here. So yeah, and also the fact that this gap here is a weekly gap. Weekly gaps are pretty rare not to get filled, so we're likely going up here to fill this gap. That's my my best take on it. Okay, so that is the NASDAQ, just absolutely beastly. And let's go over to the VIX. VIX is still in a downtrend. It's trying to build a base here, and it may very well be doing that. And you can see the 200-day simple moving average for VIX. That might be an interesting area for VIX to establish some support, or I mean, we're right around there basically, but might actually go and touch it. But certainly VIX, no signs of VIX coming to life yet, so that's at least short-term bullish for the market. And if we look at the VIX VVIX tool, we're still on a buy signal. We're certainly grinding along the blue moving average here on SPX, but it looks like it's basically acting as support. And we're still below the red moving average here on VVIX. And VIX and VVIX are still kind of drifting down. So this buy signal that we've been on is still in effect. And I suppose I should kind of highlight that. So that's where we got below the red moving average on VVIX. This is where we got above the blue moving average on SPX. So yeah, buy signal is still in effect. So nothing to really discuss here on this tool. All right, well, for the Monday, of course, is Memorial Day, so the markets are closed. So it'll be a shortened week starting Tuesday. But I expect, you know, kind of a sideways to bullish week, and I think there's a pretty good chance this coming week we see 3,000 plus on the S&P. And then I'll be looking to exit the long futures contracts I got on that. I don't care about selling the exact top. If I can grab 100 points from the entry, I'll be happy enough with that. And then kind of sit back and potentially wait for a shorting opportunity to set up. But it's just not there yet. All right. Serial Trader signing off.